The real objective of the family is to maximize the long-term return of our investments while ensuring that we minimize the risk of permanent loss of capital.
Hello and welcome to the FT Studios in London for the latest episode of PWM's Family Matters video series. I'm very pleased to be joined today by Guillaume Dalibot, CEO and Portfolio Manager at Katko Capital. Guillaume, it's a real pleasure to have you with us.
Thank you very much for your invitation, Elisa.
Can you give us a sense of the size of Katko Capital and how much of it comes from your own family wealth?
So in total, Katko Capital manages 120 million euros. All of that in equities, mostly in Europe, and the family investment represent the majority of those assets.
European equities have staged a comeback this year after years of underperformance, but US stocks continue to hit new highs. Where do you see better risk-adjusted opportunities for investors? Why should they invest in European equities?
When we look at companies, we look at their geographical footprint. And if we look at our specific case, our portfolio, in aggregate, generates 30% of their revenues in Europe. So they are truly global companies able to capture opportunities everywhere in the world. We have designed a process, an investment process, which focused first and foremost on selecting the highest quality companies. And that process is very much bottom-up. What is important is that the companies we look at meet quality criteria that are defined in our investment process. So we're exposed to AI, defense, which are doing well, but it's not because we decided to get exposure to those sectors. It's because while we were screening the market, we thought that intrinsically these companies were boasting outstanding qualities, such as very strong governance, very strong competitive advantages, which were leading to sustainable market share gains. Because there's a very important belief at Katko Capital is that it's operational performance, operational leadership that drives financial performance and ultimately share price performance. Actually, high quality companies are extremely rare. We want companies to rely on their own cash generation to sustain their growth over the long term.
So how many stocks do you invest in?
So at the moment, our portfolio has about 20 stocks, 21 to be precise.
Mm-hmm. What does diversification mean in practice? How do you make sure that your family wealth is well managed and in a diversified way?
The real objective of the family is to maximize the long-term return of our investments while ensuring that we minimize the risk of permanent loss of capital. The other important factor is that we are very long-term focused. Our investment horizon can be very long. Therefore, we can sustain some and tolerate some kind of volatility. We are convinced that equities is the best place to invest over the long term, and that within equities, quality stocks tend to outperform other investment strategies.
How do you figure out the size of the market share and who is gaining share?
Few companies like to disclose their market shares, very sensitive information. So we have a whole methodology to gather as much information as we can on first the addressable market, the segmentation of the market, and then within this market, who are the various players and what are their market share evolutions. We do many interviews of industry experts. And these industry experts can be former executives, competitors, customers, suppliers, and we can cross their views, their estimates, and come to our own estimate of that situation. But it takes a lot of time and a lot of energy, but that's where we believe we can create value over the long term.
But many families are chasing private deals for control and higher returns. Do you risk perhaps underperforming compared to the broader allocation across asset classes?
There's always a risk, but we have a conviction, and our conviction is that equities perform very well over the long term with controlled volatility, very low financial leverage. So the risk of permanent loss of capital for us is paramount. And in our case, there is no debt. When you invest in private equity, often there is more leverage. So It's a riskier asset class than the high-quality stock that we invest in. We're probably not prepared to take that risk, and also we don't have the skills and track record to invest in that space.
So governance matters in any firm, but in a family-owned business is probably more important. How do you make sure it works in practice?
I have a team with me. We are 3 persons. I have 1 co-manager, and he has legal responsibility to ensure that I comply with the mandate that we've been given by our investors. So I've created a research advisory committee where people can challenge our investment cases. And then there is a board that has oversight on our work, ensuring that we also comply with our investment objectives. So there's a lot of governance, balance of power involved in our organization. Not a single decision relies on one single person at any time.
So we are living very difficult times. How have tariffs and broader geopolitical tensions affected your investment decisions?
The stock market history is paved with geopolitical shocks, adverse macroeconomic environment. And if you look back, in fact, the stock market has climbed that wall of worry for decades. So I see our job as really reducing uncertainty as much as we can. We want to make sure that during these unforeseen events, the companies can withstand the worst crisis possible.
Younger generations often care about sustainability and stewardship. In your view, which practices support long-term value and which have little real impact?
We have our own governance and analytical skills, which includes about 20 criteria. So we go through those criteria on all the companies we analyze. On social aspects, we have a few criteria as well, but they are generally more difficult to assess. And on the environmental front, we are part of the Carbon Disclosure Project. It's an excellent initiative to be part of, and we rely on their rating to ensure that the company we look at tackles sustainability in a very serious way.
So do you have families that invest alongside you? What kind of percentage do they represent in the fund?
Actually, most of the outside investors in the fund are families who actually are sensitive to this community of interest. Our expertise and track record with the questions and challenges that these people bring to us, I think you create a virtuous cycle that benefits our co-investors and us. They can leverage our knowledge on equity markets. Their question, their challenges also ensure that help us actually stick to our investment discipline.
So what's your outlook for European equities over the next 12 months or 3 years?
When you invest in equities, you need to project your investment in a much longer horizon than that 3 to 5 year horizon. In terms of the European equities, I think they will obviously rise and deliver good performance. As I said, when we invest in our fund, we expect 10 to 15% average annual improvement. We're not always right, but that's our goal.
Guillaume, thank you very much for sharing your insights with us.
Thank you very much for your invitation, Elisa.